Mike, I mean, when Cyril Ramaphosa was appointed in December as the president of the ANC, banking stocks went crazy. He came in as president, they went even more crazy. My question to you is, have you seen the increased optimism that shareholders are having towards the banking and financial sector being reflected in the number of customers coming in, walking in your doors, the number of companies wanting loans?
Thanks and good afternoon. So certainly I think it's early days to see that renewed confidence translate into higher levels of customer activity or loan growth. But we certainly know things like the renewable energy projects that many of us had spent months and months, if not years, working on, none of which landed in 2017 are now much more likely to land in 2018. And I think a lot of the interest in banking stocks will be as a result of them being reflective of interest in the economy. And as Larry Summers famously said, confidence is the cheapest form of economic stimulus. And certainly we have started 2018 with much higher levels of confidence.
You touch on renewable energy projects, and I did see quite a slowdown in the demand for loans from your corporate investment banking division because projects being placed on ice. So it was these projects specifically that people had sort of taken a bit of a backseat towards.
I think what you saw happen a lot across, in particularly wholesale clients and high net worth clients. So our CRB business and our Nedbank Wealth business, that's really where customers react soonest to changes in sentiment. So we saw lots of companies postponing projects, waiting for the results of the December elections and looking to reassess again those in early 18. We also had a number of large settlements and early repayments. So that all of those weighed on the loan growth, particularly in our wholesale business. But we managed to have pretty decent growth in our retail business, where loan growth was running at about 5 or 6%.
And I see this time around quite a drop in impairments. You mentioned that a lot of customers were, paying off their loans earlier. Was it a function of that alone, or was there also stricter lending criteria that Nedbank placed in what was a difficult environment last year?
You're 100% right. You know, your impairments today are very much a function of your lending criteria over the last 2, 3, 4 years. And we've certainly been very selective on our lending criteria in the last 2, 3, 4 years, and that comes through in our impairments today. But also in particular on the wholesale side of our business, we had historically raised some specific provisions against some counters, and we've worked really hard with those companies over the last few years, and we've been able to release those provisions as either we've been settled, those companies have returned to profitability, or we've had our security enhanced.
And onto some of those provisions, or maybe also some bad debt. We've had a lot of global lenders reporting on their exposure to Steinhoff and the hit they've taken as a result. Anything from Nedbank?
I think what we've said is that we've had absolutely no exposure at all to any of the Steinhoff international offshore businesses or to any of the margin lending activities that the big banks took their losses on overseas. All of Nedbank's exposures to the Steinhoff Group are to the domestic South African operations, and we currently, as do the other banks, think that those businesses remain solid and profitable and very capable of repaying those debts. So we think that we're absolutely fine with our domestic exposures.
All right, so fine with the domestic exposure right now. Let's hope that the positive outlook that many are betting for Steinhoff's domestic business actually plays out. But Mike, you have an interesting forecast here in terms of how you are guiding for future HEPS. Help me understand. You are expecting HEPS in the medium term to grow by GDP growth plus CPI plus 5%. Now that sounds like quite a big number to me, but can you simplify it?
Yeah, so, if this is our 2018 guidance that we provide to the market. So GDP growth this year, we're expecting to be around about 1.6%. If inflation is about 5%, and then you add another 5 on top of that, really what we're saying is we expect to grow diluted headline earnings per share greater than 11.6%. Now, for Nedbank, that really is going to come from 2 places. Firstly, in what we call our managed operations, where we're expecting to get some boost from the improved sentiment in the domestic economy. But by far the largest contributor to Nedbank's earnings growth in 2018 we think will be the ongoing turnaround of ETI following their low base in 2017.
And to what extent, in terms of the consumer or the retail business, to what extent will this new VAT hike that's kicking in curtail that, if any?
Yeah, so certainly consumers are going to remain under some pressure as a consequence of the VAT hike. And we would really expect that the improvement in revenue growth will take place mostly in those sectors that saw the headwinds in 2017. So that's in the CIB world and in the investment world in our high net worth client space. I wouldn't expect such a dramatic turnaround in the retail environment.
So let's talk about some innovations. Mike, I see that the group is trying to be a more hip or more attractive towards millennials. You've got some innovative products that you'll be releasing there. Tell us a little bit about that.
Yeah, it's a really exciting time to either be working at Nedbank or be a Nedbank customer. Last year, we put out 2 new banking apps, which have both done phenomenally well. We've had more than 400,000 downloads on the Nedbank app, and the Nedbank Private Wealth app for our high-end customers is ranked as one of the top 6 private banking apps in the world. But if we look forward into this year, we've just recently released what we would call a banking ecosystem or platform called Unlock.me, which is aimed exactly at millennials. And it's really a marketplace that millennials can go to. It's got fashion items, it's got travel items, it's got goods and services that they can purchase, it's got entertainment items, and really what Nedbank does is provide the back-end plumbing to enable all of that transactional activity and payments to take place.
All right, so you're talking fashion, travel, music and the like. I imagine that you've partnered with some stores.
Yeah, absolutely. So in any form of platform business, which is essentially what this is, you know, we provide the platform and the infrastructure, but we actually outsource a number of the actual product delivery to people who are experts in this area.
I mean, Mike, the crux of Nedbank being able to achieve the kind of growth or profit growth it is looking for is economic growth. And as we try to grow, the narrative in South Africa is inclusive growth. And you speak quite deeply about what Nedbank is trying to do to play a greater role in achieving inclusive growth in South Africa. Please tell us.
Yeah, so, you know, certainly from a South African point of view, we know that growing this economy and growing it inclusively is absolutely vital for social cohesion. And banks play a very, very important role in that. In fact, it's our social license to operate. So Nedbank pays a lot of attention, not just to what we do for shareholders, but what are we doing for our staff, growing and developing and transforming our staff base? What are we doing for our customers and the products that we're providing them? What are we doing for communities? How much money do we put back in communities in socio-economic investment? How is Nedbank doing in our own transformation journey, where we've now remained level 2 under the new amended FSC codes? And then from a nation building point of view, we've been very, very active engagers in initiatives like the CEO initiative, which is really the type of social compacting that I believe you heard the President speak about in his State of the Nation address.
And Mike, perhaps I can get a take from you on the new President and the economic plans he outlined in his State of the Nation address and also in the budget.
So we would certainly say that it is early days and the new president has very large challenges ahead, either challenges in the South African economy or challenges within the ruling party. But we've been very encouraged by, in particular, the very strong stance he's taken against state capture and corruption. And I think that's the foundation for putting confidence back into society in South Africa and galvanizing us as business, government and labor to work together to create a better South Africa for all our citizens.